Clear my toe here. All right. Hi, everybody. Morning, good evening, good evening. What am I talking about here? Morning. I'm so used to doing the morning show here. All right. Good evening, everybody, and welcome to another edition of DayTradeSPY.com's Week-In Review. Yes, a special edition here. It's a Thursday night edition. Thursday night edition. And pretty cool. Pretty cool. Questions are already coming in. Lots of salutations. Merry Christmas, Happy Holidays, all that wonderful stuff. All right, good to have you all here. Let's get started. I see a lot of people still joining us. You've got a really good crowd here tonight. Oddly enough, good to have you all here. Good to have you all here. So what we did here was normally this is on a Sunday night. Okay, Sunday night, 8 o'clock Eastern time. We do this every week. Most weeks, I don't know about every week. Once in a while, we take a vacation. But this week and next week, we've switched it over to Thursday because of the holidays. We figured probably want to be with your family on Christmas Eve, 24th, and also New Year's Eve. I'm pretty well guessing you're probably going to be celebrating New Year's, going out or whatever. So that's why we changed it up to this week. All right. So I just want to make sure of that. All right. Let me just take a look here, make sure that we are going to record this as well. They're recording this and it is going on YouTube as well, live. Okay, that's what we want. Question here already. What is that song? I like it. Thank you very much, Eric. It's called Loud and Clear. And the group is called Life is an Epic Film. Life is an epic film. You won't find it anywhere. You actually have to buy it. You have to go on Shutterstock, I think it was. I'm not really sure where we got it. Shutterstock, I think. That's called Loud and Clear. Anyway, we've got the rights to it, so that's why we keep playing this one. Okay, getting started here, folks. First of all, there is a questions box for your questions and comments, and I am the only one that sees that, so go ahead and say whatever you want, please. Use the questions box. Simply click on the questions box icon, and that should get to me. So we'll get started right here. Okay, let me just find my cursor and where did this thing go here? Okay. All right. I am trying to get my act together here. So anyway, my name is Hugh, and it is December the 21st. Okay. Now, I want to tell you, my associate, Aaron, he is off on vacation, but he did send some pictures from Iceland. These are a couple of pictures from Iceland before the big volcano. And he also went to Paris. He's in Paris. I think he's there now, flying back. He sent some pictures from Paris. This is the Louvre. He's been, I guess, going sightseeing there, and he just wanted to make sure that he sent some proof that he was there. And that is the original Mona Lisa. The original Mona Lisa. Okay, so Aaron is not with us here tonight, unless by surprise he chimes in. He did this morning from Paris, France, and we did get a chance to talk to him. We get sort of caught up as to what he's doing and whatnot. And I guess that's all part of the fun. As a trader, you're able to have the money and obtain the money. You can do the things that you want to do. And he likes to travel. I can tell you the last several months he's been to, oh my gosh, where has he been? Mexico, Florida, Iowa, California, Iceland, France. I'd say he likes to travel. He's enjoying the life, and that's awesome. That is so cool. All right. Anyway, I mentioned about using the questions box, and I want to get a couple things here. First, I want to ask you, how familiar are you with options? So I want a little bit of an interactivity so I know where we're going with this whole thing. Okay. I don't want to spend a lot of time with a sort of an introductory kind of a session with options if everybody kind of knows where options are. So punch up here in the questions box what your familiarity is with options. And smile. Thanks for that, Phil. I had the pleasure of talking to Phil last night here, Phil L. Here. There's the Hugh I remember. All right, cool. So let me see where you're all from. Florida. Cool. Happy holidays. Merry Christmas. Cool. Oh my gosh. Salutations coming in from all over the place. Strictly follow your 6% rule. No signal pick today. That's fine. Number 3, 4, 3, a lot of threes. There's some twos. Okay, there's no ones here. Okay, if there's no ones, then we're not going to learning fast intermediate. Okay, fairly knowledgeable. There's a two. Howard, okay, good to have that. Two. Very experienced trading for years. A lot of threes. 3 to 4, still learning. Learning, listening to you. Thank you very much. Fours, threes. I don't see too many ones. Okay, if you are a one, fairly knowledgeable. Greetings from Wisconsin. Good to have you here. Merry Christmas. Threes, a lot of threes and some twos, and a couple of ones in there. All right, so we can do this. All right, so here's what we're going to do. We're going to split this up in two sections. Oh, let me go to the next webinar here. The next question. All right, next question. Have you seen our introductory Sunday night webinar before? If you have, yes. If not, say no. B. If you don't remember, punch up C. If you're wondering what's a Sunday night webinar, punch up D. That'll let us know what our marketing is like or not like. Anyway, let us know that too. So what we're going to do is split it up in two segments here. The first part, we're going to talk about sort of what we've done in the last week, what's coming up in the next week, and sort of that kind of talk. And if there's any technical jargon you're not understanding, don't worry about it. You're not going to miss a whole lot. But after the first segment, all right, we're just going to play a little bit of the song, finish it up, and then we're going to just slide into an options primer. We're going to spend a few minutes just talking about what are options, why SPY, why now, why day trade SPY. All right, for those people who are absolutely totally new to everything we do. Okay, so let's just punch up here. A lot of people saw, okay, yes, it looks like it was here. No, okay, a few no's. All right, cool. A couple of B's there. All right, that's good. There's no D's. That's I like that. If there was some C's, I'd be concerned here. Okay. I'm batting 100 except for once when I didn't obey the rules. Okay, cool. All right, gives me a good idea. All right, well, good to have you all here, folks. Let's move in here. I'm going to give you a second or so to read this disclaimer. And while you're doing that, I'm going to take a little sip of this water that I need here right beside me because I've been talking all day. That's what I do. Some people work with their hands. Other people work with their brains. And then there's people like me that works with my mouth. If I lost my voice, lucky for you. No, it's not true. Okay, you alone are responsible for all your own trading, and past performance does not guarantee future results. I think you know that. There we are again. All right, so meet your hosts. Who are we anyway? Well, my name is Hugh, deep in the trenches, learning. Okay, I learned this stuff from the hard way. When my own financial advisor blew out half my account, that's when I seized control. Figured out I have to learn how to do this myself. Took all these different courses and different things. I learned a lot, but not those very really important things that I needed to know. There's a lot of mental issues I did not know. A lot of these things I learned, and those are the really important things that I learned, and those are the ones that kind of stuck with me. So I celebrated my wins. I had a lot of great, great trades. I had some good wins. I also had some amazing losses too. Some life-threatening losses. Oh yes, career-limiting moves, where you know the kind. You have to wait a while until you load up your account again. Those kinds of trades. Um, that was not fun. I remember some really bad ones, but I'm sure we've all had them. Anyway, over the years, I learned what works, what doesn't work in both trading and training. Eventually, I started making some pretty serious money in the market. I drilled down. I started with equities. I took a look at Forex, futures, different things. And back then, I don't think we had currency. I don't remember currency at all. Crypto, there's no crypto. There was currency. There's no crypto. I don't remember anything called, what do they call those? Non-fungible tokens or something, NFTs or whatever they're called, pictures, little pictures or something. Um, Crazy. But anyway, we didn't have that, or at least I didn't know about them. Anyway, eventually I stumbled on options, and then I drilled down. I started with SPX, which is the basket of the top 500 stocks. Then I discovered SPY, which is the stock that follows the SPX. So it's a single stock that follows the basket of the top 500 stocks, which is pretty good because now you're paying 1/10 of the cost for an option versus the basket of the top 500 stocks. And the moves are great. Most liquid stock out there's got a lot of great benefits to it. I just felt very comfortable with these things. But I did learn a lot of stuff and I started making some pretty serious money. And that's when people started asking me, Hugh, what are you doing? All of a sudden you got a lot of new toys in the yard, right? New cars, a lot of vacations, taking a lot of cruises, taking the family on different things, and a new house even, built a new house and stuff. And anyway, beach house and different things. So it had a lot of good things happen. New airplane, like to fly a new airplane. So people started asking me, and I said, well, I'm trading options, SPY options. Well, can you show us how? They all kept coercing me into it. And, teach us, please. Let us know what you're doing so we can emulate what you're doing. I said, well, I'll put it up on the website. I'm not so sure, emulating is the answer because by the time I place the trade, frankly, the last thing I'm thinking about is telling anybody right now or telling you or just posting on the board. I'm focusing on my trade. I'm not focusing on anything else, right? So that's why I don't know, I didn't know if that was going to work out or not, but it turned out like it's, I would post it before when I'm looking at trade and then after the fact, and people say, well, teach us what you're doing. Can you teach us? So we started the training, we started the inner circle, we started videos and ebooks and a whole slew of stuff. And that was back in 2010. 13 years later, we get this call. Eagle Financial Publications wants to buy us out. They made us a deal. And so Eagle Financial Publications now owns and operates DayTradeSPY, which is phenomenal because these guys are great. Guys and gals, they're all great group, great backup. They're backed up public company, the whole works. And anyway, they're really amazing and they're handling all the marketing and all the administration. So I can just focus on teaching, right? And our group is teaching. So we had a small group earlier and we had to do everything, but now they took all of that off our plate and now they just want us focused on teaching. And then something really cool happened. They brought on Aaron Stevens. Aaron Stevens, and he's not here tonight because he's in Europe on vacation. But Aaron's a pretty cool guy. And he's younger than I am. I'll be 69 January the 22nd. But Aaron, I think, is about 41. So now, so he comes from similar but different background. He started trading in his teens. He was 18 years old when he had his first trading account set up. At 18, and most kids at 18, they have no clue about the stock market. The stock market. I talked to people. I had actually an email coming in from somebody the other day. He said, Hugh, my kid wants to. I was telling him about you, but he's so scared to death of the stock market. He just wants to pursue his career, whatever that was. That's fine. It's not for everybody, and it might not be for everybody now, but it might be later, right? And even if it's not for you now, it's good to know about it because it might just pique your interest later, and you might just develop an interest in it. I mean, that's the way we are. I remember as a kid, I was not interested in things that I am in today. And what I'm interested in today, I wasn't as a kid. And I'm sure what I'm interested in today probably won't be in 10 years and 20 years from now if I live that long. Our interests change, but at least if we're exposed to a lot of different things, we are familiar with it. I actually had a friend of mine bring over his kids, actually two sons. I'm thinking about maybe 3 summers ago. He just wanted to find out what we're doing. And he went to he's actually in school finishing up to be a chiropractor, and the other one is something else. He's doing something else. But my friend Nick, he didn't want to tell them you have to get into this, but he just wanted to expose them. And Nick is a dentist, and he just wanted to expose them to many different things, which is phenomenal. I love it when people do that. How are you going to know what you're going to like or not like if you're never exposed to it? Anyway, Aaron started doing this thing as a kid and became a technical analyst for a $150 million commodity fund. And we were very fortunate. It's like a coup, right? We grabbed this guy from the commodity fund, brought him over here, he does the trading room with me every morning. And this is the coolest thing. So Aaron has his set of indicators, technical indicators, and he's very good. And I have my set of technical indicators as well and fundamentals, and I'll tell you, I'm pretty good. So we have a saying that when our indicators unite, our trades ignite, they just blow up. So If Aaron tells you the market's going to go up and I tell you the market's going to go up, you better be buying call options. For those who don't know, call option, if you expect the market to go up, you buy a call option. If you expect it to go down, you buy a put option. Call up, put down. Anyway, Aaron's not here with us tonight. I'm sure he is in spirit. And we certainly look forward to having him with us hopefully next week when he gets back. And right now, what we're going to discuss here tonight is what happened recently, and the upcoming week. We're also going to talk about our $2,000 to $10,000 challenge, your challenges. All right, so put up in the questions box. We're going to answer your questions, and I'm going to give you that options primer at the end of the session. Here's a look at the last few days, just this week. All right, just this week here. So this is what the market looked like. Real quick, I'm going to go over it because it's not so much important what happened, as much as what's going to happen. But coming out of Monday, it was a low, no news day. SPY mildly gravitated to the upside, settled in at the closing bell, about 60 cents higher than it opened. So not a big deal here on Monday. On Tuesday, we had some building permits, some housing numbers, some stats there. Favored both the economy and the markets. Again, we just kind of drifted to the upside here. Late season, late December, late year trading, markets do gravitate up. Santa Claus rally. On Wednesday, we continued the rally and on consumer confidence reports to reach a high not seen since early January 22, almost 2 years. And we knew and we discussed that that is going to be a very, very strong resistance level. In fact, Aaron even predicted that, watch for a sudden downturn. And then it came. It was sudden. And I mean, it was sudden. And all of a sudden, a massive, massive sell-off. I don't know who triggered it or how it triggered, but we lost, about 8 points or something on this incredible sell-off that happened on Wednesday. And today's Thursday. We had some GDP numbers, unemployment claims, and Philly Fed Manufacturing Index. These rock SPY up and down, down and up, but we ended up recovering much of what we lost yesterday, about half of what we lost yesterday, back on its way up. We're back over 472. In fact, pushing into 473 here. Didn't see that coming here from yesterday when we were down at 468 and under. So here's a look at the seasonal charts. For those who don't know what this looks like, that blue line is where SPY is now. The red line is a seasonal chart. That is the red line is a composite of the last 5 years closing balance on the daily charts. All right, let's just stretch this out a little bit. Let's just zero in on what's going on here in the last few days. SPY historically rose about 2 points from about a week ago, and seasonally it dropped about 8 points the following week. So going into the next week. Now, I suspect that possibly that drop that we just had yesterday, that could be that drop that we've seen here. So not to say it's going to happen again, but watch out. As we're sitting at these lofty levels, we could see a very strong resistance level, and that could actually push SPY back down. So we're going to wait and see what happens there. Looking at the week ahead. All right, the week ahead. What do we have coming up here? Well, let me see what's going on here. Where did that little crazy thing come from? Let's get rid of that Friday thing, what that is. Friday, tomorrow, we have personal consumption. Personal consumption expenditures. That's usually a pretty high impact item. It is one of those inflationary kind of indicators. We also have durable goods orders. And where did it go here? There we go. Consumer sentiment report and a new home sales report as well. Okay. Now, obviously, the weekend is coming up, and Monday, markets are closed. Christmas Day. Tuesday, it's a no news day. Things are going to be pretty quiet. I think a lot of people are still going to be out on Tuesday. Wednesday, we've got Richmond Manufacturing Index coming up, and pending home sales and unemployment numbers coming in on Thursday. And Friday, we've got a Chicago PMI report. And probably later in the week, as I mentioned here, that's when the volatility is probably going to elevate a little bit. But that's kind of what the news is scheduled right now at this point for the coming week. So volumes here this time of year might be on the light side, but watch for elevated volatility Friday, that's tomorrow, picking back up on Wednesday into the end of next week. All right, so obviously no trading on Monday. Even tomorrow, I suspect that in the afternoon. Trading is going to be light. I do not want to be in a trade tomorrow afternoon. Not even sure if I'm going to be in a trade at all tomorrow. Maybe, probably in the morning I might, but I'm not going to be too crazy about it. Okay. Sometimes it's better to not be in a trade wishing you were than to be in a trade wishing you weren't. So I'm expecting volumes to maybe lighten up a little bit here and trade small, trade often. Watch for possible sudden drop-offs at major resistance levels. So as we head back up there, I'm not so sure we're going to penetrate resistance, but there could be some very strong resistance coming in next week, and we could see a move back to the downside. So watch for that. All right. All right. So there we are again. There are many opportunities that are provided to us every day, ladies and gentlemen. If you go back to those charts, you can see them. And it's uncanny. I was just talking to somebody about that the other day and how if you go back to the charts and using the indicators that we teach you, you can see the multiple times. Oh my gosh, I could have made money here. I could have made money there and there, there and there. And you scratch your head and say, well, why didn't I? What was I? At the sleep, sleep at the switch or what? But folks, we teach you, we show you how to spot them, how to trade them. All right, that's what we do in the trading room every morning. So it's a learn and earn session. It's not a watch Hugh and Aaron trade session, although we do trade, but we actually teach you things. Okay. And these sessions are interactive. So if you have any questions at all, you ask the questions, we answer them real time, real market trading environment. Doesn't get any better than that. When I learned to fly airplanes, they're talking about simulators and these kinds of things. And you can get a simulator. My gosh, you can even put a simulator on your computer. It's not the same. It's not the same. Okay. Um, the real thing is the real thing, right? Any pilots on here, you'll know what I'm talking about. Simulators are nice when you're maybe trying to replicate a little situation or what would happen if we're in this situation or whatever. But so you're eliminating the danger, but there's no replacement for the real thing. And just like in aviation, same with trading. So you can have all the theory you want, and that's what I noticed about a lot of those courses out there. They're very much theoretical, and if you did this, then that, and I love it when they say, "Well, if you bought it at the low and sold it for the high." I love it when they say that. I say to them, "Well, and how did you know that was going to be the low, and how did you know that was going to be the high way up there? You could not have possibly have known that, right?" Or where they say, it's about market timing, market timing. And just how do you get that market timing? The way I see it, it's just a stroke of luck. Like, how did you know? How did you know? Did anybody here know that the market was going to tank yesterday at around, what is it, 1 o'clock or whenever it was? Did anybody here know that all of a sudden we're going to see a sudden tank? Now, Aaron, he knew because of his indicators that at some point here, this stands a very good chance at coming down. Did he know precisely at 1 o'clock that's when we're going to see that tank? No, of course not. So it's kind of impossible to really nail it to the point where you're right smack onto that very moment, right? Anyway, hindsight's 2020, but we teach you. So we may not know where the market's going to go a year from now, or 6 months from now, or even a month from now, or you know what, even a week from now. I don't know. I got a pretty good idea, but not that I would put a whole lot of money on it. But we have a very good idea as to where it's going to go today. So we actually have a pretty good idea where it's going to go today. So that's one of the big cool things about what we do. All right, let's move on here, folks. 2 to 10K challenge. 2 to 10K challenge. Here is what happened. Here is the chart. And I am proud to say that we hit our target. We hit our target. We hit our $10,000 target today. And I am going to quickly go through the spreadsheet and tell you exactly what we did. I'm not going to bore you with all the individual numbers. All right, what do we have? 5 trades in here. So we did a total of what, 71, less I think 5. So we did about what, 65, 66 trades? No, sorry. Wrong. I think about 63 trades. So we started, and this is version 2, by the way. We did this already from April to July. So we started this September the 25th. We started with $2,000. Our target at that time was $50 for the first trade. Our ending Target was supposed to be $2,050. The goal was to turn that $2,050 into the next trade with a profit target of 51. That would have taken us to 2101. And then you see what we're doing here? We keep adding the profit target to our beginning balance, and then we have our ending balance. But the reality was a little bit different. This column here, F, is our actual gains. So that first trade, we didn't make $50. In fact, we made $115. And we invoked a couple different strategies in this, mostly our scalp. Sometimes we'll do, our bread and butter strategy. Sometimes we'll look at the breakouts. Sometimes we'll look at maybe even using the OMG strategy on this, which is short for out of the morning gate. So we'll try and do, different strategies, and we discuss these, but we're aiming at turning $2,000 into $10,000 in 3 months. In 3 months, and that is exactly what we had done. Okay. And then, of course, I wrote in the notes as to what we actually did, how many contracts, which contracts they were. Here's 4 contracts on the 426 calls, 491 to 520. And we'll take different expiration dates depending on the situation, depending on volatility, depending on what day it is, depending on how we feel about the market, depending on, all this. Now, there were some days we didn't trade. These gray blocks, we did not trade. I think there's like 6 days when we did not trade. 6 days that we did not trade it. We just kept inching it up. And yes, we had some losers. All right. Everybody will have losers for at one time or another. If anybody ever tells you they never ever ever lose, they're lying to you. Okay. But everybody is going to have losers. And unfortunately, we had a few. We had a few losers. And those red blocks, those are losing days. All right, the first trade there, the first loser, I want to talk about those guys just a little bit, just touch on them. That was a loser. What happened there was the market had not delivered in the time frame I thought it would. Bounced around, came back, and anyway, I took a small loss of $180. Now I was already up at that time, $908. Just brought me being up over my target of 640. I thought, you know what, I'll take the hit because suddenly the reason that I was in that trade sort of disappeared. So by not being in that trade, I don't want to be in a trade just because. There should be always a reason why you are in a trade. If there's no valid reason to be in a trade, you should be in cash. Okay, there's a very important lesson for you. If you have no valid reason to be in a trade, you should be in cash. So I took a bit of a hit there for $180. That was our first loser. We're trade number 24. There it is right there. Second loser, $224, trade number 31. I believe it was the same idea. Suddenly the trade just kind of turned against me. I didn't like where it was going, so I took a small hit on that one, knocked us down a little bit, still above our goal here. And then it was right here. It was just before, it was the day before Thanksgiving. I actually took a pretty bad loss, $1,180. Knocked me down a little bit here and kind of got brushed up. And well, the markets were closed Thanksgiving, so there was no trading that day. Kind of brushed up and got back into the game here the day after Thanksgiving. So we had a loss, then no trading on Thanksgiving Day. And then the following trading day, I took another loss for $1,800. What is that? About $1,980 loss in like a 2 day span, 2, 3 day span. Now, what the heck is going on? It actually put me underwater here, $474. So slowly we climbed out of that. Right around Thanksgiving, we climbed out, got back on track. And then December the 14th, which I believe was around when Powell spoke. I'm pretty sure it was right around there. Took another loss. Took another loss. Maybe it was before that. I can't remember. But it's in the 473 calls. Took it from $1.56 and sold it for $1.09. So I lost $2,640. I know there's some people had some buddies, trading buddies that said, "Oh my gosh, it's not good," right near the end here. So, but I attribute that to, excuse me, this concept called goal gradient effect, which is this concept that when you're getting near the end, you tend to get a little careless. You just want to kind of get there fast. Again, in using an analogy in the aviation world, is what they call get home-itis or get there-itis. You just, so you kind of, skip a few steps, skip a few steps in your checklist. Yeah, we got lots of gas, no problem. And then you get it there, and then you're, 100 miles out, and you realize, oh, wait a second, why is this gas gauge showing empty? Oh my gosh, we still have another 50 miles to go. Are we going to make it? That's not good. So this goal gradient effect is what kind of happened to me. This funny thing is because I was talking about it. I was actually kind of preaching about it. Be careful, watch that. And then I got caught up in it. There's the human element of this. You get caught up in it, but doesn't matter. I got back on my feet, brushed myself off, and then we changed our tack a little bit here. So what we're doing, considering this is like a cash account, and by that I mean you can trade as much as you have in your account. Now, up until this point, I just basically did one trade a day as I built up my account. But when I got to this day right here, December the 18th, okay, right in here, the one I'm showing you here, we had $8,414. So my initial trade was to put 20 contracts on the 271 calls. 262 is what I bought them for. So I was in there for $5,240. So I still had lots of money, like $3,174 with which to trade. So normally I would buy lots of time, but I saw the market really pushing to the upside. I felt very confident that it was going to go back to the upside. So I ended up buying 20 471 calls, $5 to $25. So these were shorter expirations, higher risk, but I felt much more confident that was going to happen, and it did. So we picked up another few dollars. All told that day, came out with $720. The next day, similar thing. We have 9,000, sorry, we had $8,414 at that time to work with. That's what it was. 20 contracts, 473 calls, 210. So 20 contracts at 210. That was $4,200. And again, the 8414, that's what it was there. So we had $4,214 to work with. So as it's a cash account, I traded the rest of my cash that was made available to me, right? And that's what you do. So with a cash account, you can do that. And I'm going to go over and talk about a cash account later and why you should use a cash account. But three trades, I picked up $725. That was yesterday. Sorry, that was 2 days ago. Yesterday, similar thing here. We did one, two, three trades. Three trades once again. One, two, three trades, right? Yes. And we got in and made $580. Brought us back over the top. And today, basically one trade, 50 contracts, 472 calls, $1.63 to $1.75. Did that in 8 minutes. Got in right away at 9:31. 9:31, basically pick of the day type of a trade. Okay. Got in right away at 9:31. Bought it for $1.63. Sold it 8 minutes later at 9:39 for $1.75. We clocked out. By the way, this is net of commissions. Okay, it's not gross. It's net of commissions. $550 to walk away with a beautiful $10,269 balance as we took our $2,000 turned to $10,000 in a couple days before the December 25th cutoff. So we did it even with those losses. We had several losses, 6 days where we didn't trade, and we still made our targets. So I think that was pretty cool. Had a lot of cool stuff there. Okay, and let's move on. I think I beat that one to death. All right, and that was it. Okay. All right, so let's get into some questions, and this is actually your night to talk. I guess not. When I say talk, we don't open up the mics to everybody or anything like that, but find that it's just too noisy. But I'm going to go down through the questions and see about answering some of these here. Okay. Okay. And I'm gonna sort of focus in on general questions, not individual trades that you might be sitting in. Okay. That's actually saved for the actual trading room or our Tuesday night sessions for the inner circle sessions. Okay. Okay. Don S, going back to 7:55. Quick question on the pick of the day. You mentioned we can hold overnight if our sell does not occur, but we should always close out the signal trade by the end of the day. What makes those trades different? Good question. So we have two services that are subscription services. One is the pick of the day, which is what you get. You get an email every morning around between 9 and 9:20, an option that is designed to be traded right off the opening bell. Okay. There's a little more involved in that, but that's basically it. And just put up for sale for 6% profit target. There's usually enough time in these trades to facilitate if you have to hold overnight, you could. Because frankly, at 9 o'clock in the morning, when Aaron and I discuss these trades, we don't know really where it's gonna a lot can change between 9 and 9:30, but they are designed to be longer term out. So we do take into account some fundamentals as well as longer term technicals. So what you might see is a little bounce on those trades before they come to deliver their profits. And sometimes the trade will turn against you, sometimes in a fairly big way before it turns back up in your direction. So we build in plenty of time and look for a 6% good till canceled order is what you want to do. So if you, on a rare occasion, have to hold it overnight, don't hesitate to do that. Now, you don't want to let too much time pass because as you let it go, of course, the data value, which is the time component, eats away at it like a cancer. And the closer to expiration, the faster it eats away. All right. If you don't watch those things, they are going to eat away at the premium. And come expiration, there's not going to be a whole lot left. And if you have to have the option go up, let's say $1 in value, you might have to have the stock go up $10 in value. Not where you want to be. So do watch it, but don't hesitate if you have to hold it for one, maybe even 2 nights overnight. Okay. However, the signal is a little bit different. That uses an algorithm that says, okay, this thing is going to go up soon. This is going to go up fairly soon. There's a certain um, trigger that this triggers on, and that is delivered live during market hours. You don't get the email beforehand. 3 to 5 times a week, we deliver this signal to you, and it goes on your in your email and also on your cell phone as a text message. So you get this, and within 2 minutes, you have to get into the trade. All right, put your sell order in for 5%. They generally deliver, I believe, in the morning. They might have had a couple just after 12 o'clock or something, but nothing in the afternoon. So they're generally in the morning trades, okay? And if it does not deliver your 5% profit during the day, close it up by the closing bell. Okay, just sell it for whatever it'll give you. It's not going to go to zero because again, these trades also have time built into them, so you should not go to zero. They never have. In the testing that we did a lot of testing before we actually rolled this one out. I remember the worst that ever had, we had a loss of 72%. That happened once. But we never had anything like that, before or after. So they're pretty cool trades. And that's what makes those different. Okay, so it is a little bit different. All right, so Eric, one loser in the last 3 weeks for me. Have confidence back. Eric, yes, he used to be with us before. Looks like he's coming back. Good to have you back, Eric. Get in line here. Get on board because there's a lot of great things going on here. A lot more than ever. Being more mechanical and stop buying one day and always got 5 days or more. Okay, sounds good. Jackson, good to hear from you from Fort Lauderdale. Bruce S. One question, I've been using Fidelity for the actual trades. Who would you recommend to do the actual trades with? Hey, there's nothing wrong. Fidelity is a popular program. I am not familiar with it, but if you can put in the indicators that we use and we don't customize them too much, but I'm pretty sure you probably can. I think probably the only real sort of customized indicator is the 10 and the 20 exponential moving averages. That's pretty well it. We have the pivot points on there and support resistance lines. You want to be able to draw up the charts if you can. No reason why you shouldn't use Fidelity. I don't know what their commissions are like. I like to use because I've sort of grown up, using Thinkorswim charts. That's what I'm comfortable with, so that's what we use. But there are a lot of good programs I'm sure out there that would facilitate doing what we do. There's no magic in what we do. There's no proprietary indicators that you can only get on Thinkorswim or something that's what you have to use. Okay. Um, and um, and the commissions, of course, is something that you want to make sure. So here's our tips on a broker. Obviously, you want good commissions. And this is why I like Tasty Trade. Their commission structure is second to none for my use. It's $1 a contract to open, zero to close, up to a maximum of $10. So if I'm trading 100 contracts, the most I'm paying in commission is $10. If I'm trading 500 contracts, I'm only paying $10 in commission, plus that little exchange fee of a couple cents or whatever it is. So that's not a big deal. You're going to be paying that on everything anyway. So that's something obviously you want to look at. The other thing you want to look at in your brokerage is the speed of execution. You want to make sure that when you hit that send button, that thing goes to the market right away and it gets filled right away. You don't want any long latency or something on your orders. Okay. Thinkorswim is not bad. It's pretty good. I get filled pretty good on that. By law, I have to show you my SIM account when I do the trading room. And of course, on the SIM account, there's some server issue there with Thinkorswim. There's a little latency in that, but when I give you the numbers, I'm giving them to you off the real charts. Thinkorswim is lightning speed. Sorry, Tasty Trade is lightning speed executions, which I really, really like. And I mean, it's unbelievable. Sometimes I just think, I sometimes feel I'm just thinking about it and it executes. It's just that fast. I don't know how they do it. I hit the button and instantly it fills. Like, I just don't understand how they do it, but they do. Anyway, the other thing you want to look at is that your broker does not intercept your trades. Some brokers will intercept your trades and front run them. So they will see the orders, they'll see the market slightly ahead of you, and they can trade yours, take the profits, leave you holding the bag. That actually happened to some people I know, and they promptly left their broker. So you want to make sure, check with your broker that your order is going direct to the market every time. It is not being diverted to a trade desk for review. That's what they tell you. We're bringing your trade to a trade desk for review. Leave my trade alone. I'm quite capable of managing my own position. Thank you. I don't need you to review it while, the trade is getting away from me. And I can't cancel, I can't change, I can't do anything with it. And I'm stuck with whatever I'm left with because you are reviewing my trade. So make sure your order goes direct to the market. And another thing that's kind of important is that you want to make sure that when you call your broker for whatever reason that you need to, that they answer the phone promptly and they speak English. You might not think it's important, but there are programs out there that, you know, and I've seen them myself. You call them up and, you get caught in voicemail jail, and meanwhile you've got a trade that's got to be managed or somehow it's changed, and then they get somebody on who doesn't speak a word of English. Like, oh my gosh, this is unbelievable. How can this happen? So anyway, those are important points too, obviously, and ease of use and whatever you're used to. So I hope that kind of answers your question there, Bruce. Phil's asking, do we get in free to Paris and Vegas, or do we have to pay $99 to see you in February? Okay, so the way I understand it, we were at the Money Show in Orlando, I don't know, a month or so ago, whenever it was, and it was free to go in. So we're going to have a booth. Eagle Financial Publications is going to have a booth, and to my understanding, that should be free. So you should not have to pay $99 to come and see us. That's my understanding. All right, so pretty cool. Pretty cool. Let me get down to the questions here. Let's see. Greg, thank you very much. I've been a member for 3 weeks. I only had one loss. I hope it was a small one. Uh, Greg, need to fire Aaron if he doesn't get you some time off first of the year. Yeah, just not right for him running around the world, letting you do all the hard work to finish up on the 10K challenge by yourself. Thanks for that, Greg. Greg F. I will pass that on to him, and the bosses. Maybe we can get rid of him. Why would I do that? He's okay. He's okay. Greg L. I strictly follow your 6% rule. Nice to hear that. All right, here we go. Learning fast, intermediate. Okay, here we come. Very experienced. A lot of comments. I love the interaction here. I love the interaction. Been dabbling for a year, doing very well with options lately. Good to hear that. James U. Greetings from Wisconsin. A lot of Merry Christmases and all these wonderful things. Robert S. I'm estimating it'll take me about 20 days of making money to make up for one loss. Is that about right? Okay, so we're going to talk about some losses there. Now, we actually have an online, it's actually one of our webinars, one of our recorded webinars. It's on our website, which is daytradespy.com. I'm just going to bring this up to you here, which I think I highly recommend this. Okay, let me just pull it up here. Where did I go? Here it is right here. This is actually pretty cool. It's an online workshop. If you click on it with the top right online workshop, and go down here where you see repairing bad trades workshop, $249. You're going to figure out how to repair trades gone bad, how to and when you should bail out. You should never have such a huge loss that it's going to take you 20 days of good trading to make it up. Okay, that should never really happen. And I think once you go through this webinar, it's probably about an hour and a half or so long. It's pretty comprehensive. You're going to learn how to plan your trade based on your risk tolerances. You're going to learn the strategy, how to repair losing trades, find out how to protect your money in losing positions. Again, go to the website daytradespy.com up at the top right where it says online workshops. Scroll down by this repairing bad trades workshop. I think it's actually a very good investment for $249. I don't have to tell you how easy it is to lose $249. So you might as well put that money into a workshop, a video that you can watch over and over and over again, and actually master this whole concept of when do I get out of a bad position? Do I repair it? How much time do I have left? Why did it go down? Yesterday, when that market went down, okay, now I was not in any calls. In fact, I was not in any trade. But and some people email and say, "Oh my gosh, you what happened? It's going, our market's going to hell in a handbasket." I said, "Oh my gosh, I'm loving it. I'm salivating. I love it so much." He said, "Why?" Because tomorrow it's going to go back up. What do you mean go back up? Its market's dropping. I said, "I know it's dropping. I don't look to see where it is now. I look to see where it's going. I'm interested in where it's going to go, not where it is." And sure enough, we made some pretty good money today in the market. So. Anyway, yeah, take a look at that, Robert. I don't want to see you lose money. If you're not in our trading room, get in our trading room. We talk at length about all of that in our trading room as well. Okay, let me scroll down here with these questions. Oh, wow, we've got a ton of stuff here. Okay. Okay, all right. You got to obey the rules as well, too. Okay, as I keep winning on Signal, where do I go to find out how many calls or puts I need to keep up with 6 months charts? Um, I think if you're with the Signal, I'm gonna have to check into that. I think you're supposed to be given access to, I'm not really sure if they give you the results on that. I know that there is some data on that. Uh, let me see. I don't have that handy as to what the results, but the results have been very good. Since we started the program, I think at the end of November, we only had one where you had to close out at the end of the day, and even that wasn't all that bad. Um, okay, so again, there's yeah, need to know, Jeff, how to get out of a bad trade. Take a look at that, buy that, and go through it. Okay, need some advice on the program. Do I need or a combo out of Signals, Trading Room, Pick of the Day, Inner Circle, since I don't want to overlap? Not sure, Max, what you're looking for. Need advice on which of the programs do I need or a combo. So all these programs, they do different things, all right? And I'll go into the trading room in a little bit here, but the trading room is where we sit every morning, 9:20 to 10:30 Eastern. We go over the trades real time, real market environments, real learning. That's where it all happens. Pick of the day I mentioned, you get the pick delivered to your inbox every morning between 9 and 9:20. The signal, you are triggered live through your email and on your cell phone to get it to it right away. And the inner circle, every morning about 9 o'clock, you get a brief report, 1 minute read as to where we see the market going that day. You'll also get a follow-up report later in the day, and you'll be invited to our Tuesday night interactive sessions where you can ask any questions at all about trading SPY options. Also, the inner circle, it opens up the conduit so you can ask some quick questions whenever you have anything. Just fire off a quick question, we answer them, okay? Are we going to analyze all your trades? No, not for a quick. If the answer could be if it could be answered like in about a minute, you'll get an answer. So the inner circle is actually really good. because it doesn't cost much to get in. I think it's like, oh, I don't even know what they charge for that, but it's not much at all. And I highly recommend that, as a matter of fact. Okay, do you have any pre-Christmas offers for new members who can take advantage to join this weekend? Okay, so if you want to get in on some of these offers, I don't know what they have. I do know that Eagle has a lot of good stuff all the time. You might want to just give customer service a call or email them. Um, I believe their number is 570-567-0426. It's actually on the website. Give them a call or email them and say, what special do you have? If I don't know if they do or not. I'm not suggesting they do, but their pricing is so incredibly good. Um, don't dicker over the price, folks. If you're happy with the price, just buy it. Okay. Mentors and coaches, if you get a good coach, good mentor, you don't want to dicker with the price on these guys. Just, it's good. It's, believe me, their pricing it's never been better. So. Okay, Robert D. Oh, a bunch of questions here. He said my first call tomorrow with pick of the day for the SPY code. Ask 334 call, buy to open, quantity recommend. Okay, so we don't recommend quantities. Okay, so here it is. The pick of the day, you get the email. Let me just see if I can find an email for you so I can show you what it looks like. And then, instead of just talking about it, maybe I can show you. What time did it get in here? Pick of the day. Let's see, is this it? Will this work? I think this will probably work. Let me take a look here. This is what it looks like. This here is what the pick of the day it looks like right here. All right, this is it right here. So this is what your email is going to look like. Pick of the day and the date, and here is the code right here. SPY 231229C473. For those not familiar how to read the code, SPY is obviously the symbol. And then the expiration date starting with the year, the 23rd, 12th month, December, 29th day. C for calls, P for puts. And strike price is 473. Here is a reading of the code example. So it's very easy to follow. We even color coded it for you. We even put the rules down here for you. Okay, just go ahead and read these rules. Okay, I'm not really kind of pushing to go over this in detail, but you're going to get the pick of the day. All the rules are laid out right here. Very simple. One, two, three, and it's right here. So that's what you're going to get in your inbox every morning at around 9 to 9:15, 9:20. Okay. So that's the way that should work. All right. And it should be very good. We don't recommend how many contracts. That's up to you, how much you want to put in. I think the default for a lot of these programs is like 10 contracts. Some people start out small. Hey, listen, if you want to start with one or two contracts, just so you know, you're not going to get rich on that. Okay. It's going to get you some coffee money, perhaps. Your commissions may eat up a lot of that. I find 10 contracts is pretty comfortable, but here's what I suggest that you do, and that is to paper trade it for a while. Get 10, 20, 30 good paper trades, then transition to real money, starting small, build it back up. Okay. And we don't know what the price is either. Okay. At 9 o'clock in the morning, we don't know what the price is what the price is, but don't worry about it because whatever you buy it for, you're going to get the premium back when you sell it. So if you pay $2.85 for it, that's what you pay. If you're only looking to spend, say, $3,000 in buying contracts, then you take the $3,000 divided by what I say, 285. You can buy 10, 10 contracts. If it costs you more money, you buy fewer contracts. If it costs less money, you want to spend $3,000, you buy more contracts. All right, it's a very simple calculation. So, and we do both calls and puts, and there are never any spreads. You don't have to worry about spreads. There's no naked trading. We don't trade naked. For those of you not familiar with that, it's not a clothing optional thing. I am fully clothed. It's a thing that they say where you're selling options and you're not covered on the other side with the equity. That can put you in a very precarious position. You don't want to go down that path. Let me tell you. All right, I need to learn how to put in a good till cancel order as well. That is on the trading platform. Let me see if I have a trading platform open here. I thought I did. Maybe I don't. Um, in our trading room, if you're not in our trading, join in the trading room or join the inner circle. We'll give you the detail on that. on how to place trades and how to put in good till canceled orders and all that stuff. This session is not designed to get into that level of detail right now. So, okay. All right. Clay, Hugh, please explain how you buy 20 contracts at, say, 386 with only $2,000 cash account. I know I'm missing something, but I'm unfamiliar with cash type accounts. So a cash account, you can trade as much as cash you have in your account. If you have $2,000 in your cash account, you can't go over that. Okay. So you take the $2,000 and you divide it by the option price. In this case, he's giving the example of $3.86. Well, that means it says, so it comes up to 518. You have to divide that by 100. You can buy 5 contracts because that option price, what you see there is $3.86. Each contract is actually $386. You have to multiply by 100 because each contract controls 100 underlying shares. Okay. So that's what that's all about. So divide your cash account by how much the option costs, bring it down a notch so you're not going over, and that's how many contracts you can buy. Divide again by 100, right? So if you see 386, divide the 2,000 by 386, and it gives you the 5. Just round out. If you can buy 5 contracts at that price. Okay, if I'm in a trade following the alert of the day or signal, how do I know when and where to take the loss? So if you get the signal, look for the 5%, right away just put it up for sale with a 5% gain. How do you do that? Let's see, you bought it for $3.86. You take the 386 multiplied by 1.05. You come out with 4.053. I would put up for sale for $4.06. If you don't get filled by the end of the day, simply sell it at the end of the day for whatever the market will give you for it. So, the days that killed you killed me too, Howard. You need to know how quickly to get out. When you're not comfortable with a trade, don't hold on. All right, just you gotta get comfortable with it. Do a lot of paper trading until you feel comfortable and at one with the market on this sort of stuff here. How do you determine how many calls you use, Charles? 50 calls today. Well, I used 50 calls today because I had a balance of $9,719, and the calls cost me $1.63. So I took the 9,719 and divided that by the $1.63. I had available to me 59 calls that I could buy for $1.63. Well, I didn't take the full 59, I only took 50 of them. So I actually had $1.63 times 50. So I actually had $8,150 invested in that first trade. All right. And then I still had plenty of money after left over that I could trade later with, but I didn't need to. So that's how I was doing it. Will you be doing another 2 to 10K in the new year? We are talking about that. I would say yes. Watch for the emails because I think probably in January we are going to be doing that. Is there any rule of thumb as to how many contracts you trade at any time? The rule of thumb as to how many contracts, everybody's going to have different number of contracts. I know some people who trade $2,000, $3,000, other people trade $10,000, other people trade, many, many thousands of dollars. It's whatever you're comfortable with. These days, I just like to trade 10 contracts, okay, just for fun. All right. Okay, so here's a comment here. I'm not getting the text notifications. I contacted support, but the problem has not been resolved. Greg, you might want to get back on customer support, but here's the thing. I'm not really sure how to do this. You might have to call your provider. Apparently, and I didn't know this, but on cell phones, they also have like a spam, junk, or promotions or some kind of a box that spam type text messages go into. I had no idea. So you have to find that, and there is a way of finding that. So you may have to research that. And when you find that, you'll see all those text messages are sitting there. And that has been the problem with most people because these text messages are not bouncing back, which tells us that the problem is on your end. I wish it was on our end because we could fix it, but we can't fix it if it's on your end. So they're going into some kind of a spam or junk box or something. Now, I believe if you are outside of the US, or I know that I think if you're in Canada, If you're in Canada, you don't get text messages. All right, that's not set up for some reason. It's not going through to some Canadian, not all Canadian phones, but some Canadian phones. Depends on your provider. So may want to check with them. So, but thanks for that, Ted. Ted M, you are the best. Thanks for that, Ted. But contact customer support. They might be able to talk you through that because they've gone through that. So they may be able to do it. If I knew, I could talk you through, but I'm not. I've got no experience with that, so I can't. I can't get into. I don't want to experiment with it now. So, all right. Okay, a lot of questions here. Trading room, live trades. Yes, live. The trading room is live trading. Live trading. Aaron P. How you? Thanks for all you guys do. I'm following for almost 2 weeks now, and I see your success rate is very high. However, I'm not feeling comfortable without using a stop loss, especially your trades that are very short expiration dates. We generally don't use stop loss. We manage them in different ways, but stops for me don't really work well because you could be down 10, 20, 30, 40, 50%. And and then a stop will take you out, right? Stop will take you out. Then you're still watching it as if it's still your trade. And then 10 minutes later, it reverses, goes back, and you say, oh my gosh, should I just stayed the course? I would have made money instead of, let me show, I don't have the program set up. I'm going to have to show you in the trading room why stops don't work. We have other ways of managing our trades, but stops do not work for me. If they work for you, let me know how that works out for you. Right. Can you share our daily trade room video recording? This can review. We can review this after the market. So these trading room sessions are recorded, and as a member, you do have access to all of those on the member website. Okay. And I got a comment here from Howard F. The Fidelity brokerage is okay for trading day, trading SPY, and the signal. They're all good. Tatiana, I love that name. How do I know when, how much to take a loss and how to continue to hold on? What are the major parts of that decision? Again, that's really involved. I don't want to get into that. This is not a training session in that fashion. Again, go to the website and just get that workshop. It's actually all there. Tom J, oh my gosh, good to see you. Good to talk to you here. The 2 to 10 spreadsheet is very informative, helps with confidence in the process. We'll be providing a spreadsheet for the signal service to help my understanding of its efficiency. I'm going to check in that spreadsheet for the signal, huh? Okay, just write that down for this. I'm just going to write that down and ask them. Because I don't know what their plan is or what the rollout is on the spreadsheet for the signal, whether they provide information on that or that's just sort of sent out there and how they do that. So I'll find that out. Watch for some information on that. Watch again. Okay, so he's got one of the gentlemen here has has that video I was talking about, and he's been watching it over and over again. Okay, Paling is asking, does the Ultimate Trading Workshop we bought expire at the end of the year? Okay, Paling, if you bought the Ultimate Trading Workshop and you have access to the videos, you will have access to it. We have to put a timeline on it, so we guarantee it for at least 6 months, but we have yet to drop anybody. So I would like to say that you'll probably have it for life. And if we don't have it, it's because we've replaced the videos with something else, but we've not replaced them at all. In fact, everything's sitting on Dropbox, and Dropbox is filling up pretty fast. There's a lot of stuff on there, let me tell you. Okay, I was locked out of Tasty Trade for making too many trades, not having the 25K amount, not having the 25K in my account. You have said that this is wrong. Okay, if you have a cash account, you can trade as much as you have in your cash. If you have a margin account, which is what traders or brokerages like to give you, and that would be their default. If you don't specifically insist on getting a cash account, they're going to give you a margin account. For a margin account, you need 25,000 to be in and out of day trading as a pattern day trader, which is more than 3 times in a 5-day period. Now, if you don't want to get a cash account, which actually should be easier to get because there are fewer forms to fill out, brokers don't like to give cash accounts because they make most of their money, believe it or not, in lending you money to buy stock. Even if you have a well-funded account, let's say you have $100,000 in your account and you buy $50,000 worth of stock. So it would be very easy to just simply take it out of your account. There's the 50,000. No, they'll take 25 out of your account and lend you the other 25, even though you've got way more money to cover it than you need. See, that's what they make. Then, of course, they charge you interest. Okay. The other thing to do if you are locked out, and it was actually the people at Tasty Trade that told me this, simply open up another account with them, transfer your cash from one to the other, and go back to trading. Maybe you'll lose a day, if that. And the other thing with that is you will get these good faith violations. I think you're allowed what, 3 or 4 in a rolling 12-month period or something. I think you might be allowed 4. Um, Pay attention to those. So if you go over that limit as to okay, so the way it works is let's say you're in a cash account, you got $5,000 and you made $500 and now you're trading again that profit that you had done. You're not supposed to do that. You're supposed to wait until that trade settles the next day. So if you got $5,000, you made 500, you can still only trade the 5,000. The next day, you can trade 5,500. Now, if you go over that and mess that up, they're going to send you a good faith violation. I believe you can have 4 of those. You might want to correct me on that. You have 4 of those in a 12-month rolling period. And then if you're over that, they're going to lock you out for 90 days. Okay. All right. Okay. Or give them a call. Ask them, how can I get out of this? They're very helpful. They want to see a trade. It's not them that's doing it. These are SEC rules or something. Is there an easy way to keep the charts centered as they go up and down on Thinkorswim? Again, that's something we're going to have to talk about when we do in the trading room. If you want to ask that question in the trading room or in the Inner Circle Tuesday night webinar, I don't have that Thinkorswim pulled up right now. Is the 2 to 10K challenge part of the trading room? Yes, it is. Charles is saying here, love the pick of the day, but buy at 9:30 and most sales trades are completed within 5 minutes. Oh yeah, that pick of the day. Most of the time, in a few minutes, you're done. It's in and out. It's in and out. Sign me up, Eric. You got to sign up. Okay, you go to the website, sign up. Okay, is as the 2 to K. How does the 2 to K work? Is that live as well? Only in the morning? We do the 2 to K challenge in the trading room every morning. It's all done before a live audience. That chart I showed you a little while ago, that was all done before a live audience. Okay. And thank you so much for that. Thank you. Thank you for that, Mike and everybody else. Another comment here. Okay. Yes, a lot of questions about doing the 2 to 10K challenge again. Question, is it overkill to have both the signal and the pick? Believe it or not, I've got a lot of people, and I don't even know, maybe most people have both. They are as similar as they look to you, because you're getting a pick. They are triggered based on different criteria. Okay, they're based on different criteria. The pick is delivered to you in the morning by email, and it is a negotiated thing that Aaron and I actually discuss and determine what are we going to do. Are we going to send the pick out? Let's look at volatility. How's the market going to react? I don't think we ever said no. Maybe once in a while we might say not a good day to trade, depending on, of course, on what happens. And then we determine, is it going to go up or down? Then we determine which option to trade, right? So there's that human element in the pick. The signal has got more of an algorithm attached to it. There's a computer program that actually runs in the background, and when that triggers, then you get the picks. So, but a lot of people have both, and frankly, for the price, and I know Eagle's got a phenomenal price on this. They're much more generous than I ever would be, but but they're great. I would take both, try both if I mean, if you make money on one, you make money on the other. Why not, right? Um, is it really possible to make huge amounts of money by reinvesting profits? Okay, I had this question posed to me in an email. Actually, a couple of people, they came up with these spreadsheets and they had it figured out. They're going to make like $1 million in 6 months and just keep rolling it over into compounding and stuff. And yes, you can do that. It is possible, and SPY has that capability of handling those kinds of you know, dollar amounts and volume. However, I will tell you that will you emotionally be okay to trade 20, 30, 50, 80, $100,000? Can you pull the button and say, I'm now going to invest $150,000 in this trade? Spike can handle it. That's not a problem. Will you be able to handle it emotionally? How are you going to feel when you put the 100,000 and now the market turns against you and you're down 10%, 15, 20% or something? Are you going to get scared out when it hits a 25% loss? And then you're going to sell it and your $150,000 is now worth oh my gosh, what's it worth? It's worth like $112,500. You're gonna get so mad. I can't believe it. I just blew out, 37,000, whatever, whatever. And you're gonna be, and then you're gonna continue watching it like it's still your trade. Then it goes back up around, right? So it's ever happened to you? You keep watching the trades even after you've long sold them, thinking, what would have happened if only, if only, if only. And then 10 minutes later, you said, oh, if I'd have hung on, it reversed, it went back up, I could have made a lot of money. You're gonna be pretty angry. So that's the key. Will you be able to handle trading that kind of money? That I think is the key. Anyway, another quick question before we wrap it up on this one here. Do you have auto trading? We don't have auto trading. I know what it is. I don't know who does that or whatever. If you have an auto trader and you can hook them up with this or whatever, that's up to you. I know that we don't have that facility here. Now maybe maybe we do. I don't like I know we don't, but I think that if you have auto trade, maybe it'll work, maybe not. You might want to give it a try. Another question here. What did I do lately personally? So I thought I'd bring this up. I was doing this while I was talking to you earlier. This is what I did here today. Now, I am not supposed to trade because my doctor said you got high blood pressure, you're not supposed to trade. But don't tell anybody. I did these two trades here today and I made $319. Here are the details. Trade number one took 95 cents, turned into 115, sorry, $1.15, 21% in 52 minutes. Trade number two, 313 and 325. That's only 3.8%, but 6 minutes, that's not bad. Here's my profit. $319. Here are the details. I did 10 contracts on each. Maximum invested was $3,130 at one time for only 6 minutes. Average time in a trade, less than half an hour. The risk level to me was minimal. Okay, it was minimal because I had a very good feeling that I knew where the market was going to go, and I did not hesitate doing it. I wanted to make sure it doesn't, rile up my blood pressure and goes higher. I'm not supposed to be trading, but I still sneak the odd one in. This is what I did here today. Picked up $319, and I'm good with that. So yes, and by the way, that was on Tasty Trade, Tasty Trade. Folks, I want to tell you a little bit about the trading room. Moderated by expert traders. All right. This is moderated by expert traders. Hugh, I am Hugh, Aaron, and myself. This is where strategies come alive every morning, 9:20 to 10:30 Eastern time. Learn and earn. Okay. We've been doing this now for a long time. We teach what we trade what we teach. We've got between Aaron and myself, we actually have over 40 years of a combined market experience. If you have any questions, you get them answered in real time. And this is the way it works. Watch us make real trades, real setup, real money, and we teach it all. Okay, this is where you're gonna learn. Folks, the question is, can you afford not to subscribe? That's what you should ask yourself. The cost $6.99 for 3 months. You pay it quarterly. If you really don't like it, I believe you get your money back within a month or something. And also, I mean, you know how easy it is to lose $700, right? But for a quarter, 3 months, it's not bad, right? Which is basically the value of a Subway sandwich a day. Are we not worth a Subway? Oh, just one of us, not both of us. Just one of us a Subway sandwich a day. So that's my question to you. Jump on the trading room. If you're not in the trading room, you need to be. All right, let me see if there's any other quick questions before I can kind of jump out of the way here. There's somebody coming in here. Oh my gosh. Uh, Bill M. I love his comment here. He paid for the inner circle, pick of the day, signal, and the trading room, all quarterly billing and 2 days of trading. All right. He says, you're right. It is worth so much more. Thank you for that, Bill. And oh yeah, yeah. Mike R. By the way, I made $1,200 on the OMG this morning. Congratulations. It's the pick of the day. The pick of the day, Dinesh, is 5 days a week. That is 5 days a week. If we don't, if we don't give you a pick, that particular day, it's just that the market is too crazy, and I'd rather not be in a trade wishing I was than to be in a trade wishing I wasn't. So we say today's probably best to stay out of it. Anyway, stick around, folks, for a few minutes. Right after this, we'll give you a primer on options. We're going to go through that real fast in about 10 minutes.
I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
All right, let's get back to the primer real quick, and we're not going to be long on this one here. If you are new to options, folks, what are options anyway? What is this? What is this magical, mystical thing that you keep talking about, right? Options are actually contracts. There is no mystery behind any of this. And when you understand it, let me tell you, you will be so much further ahead than most other people who trade option. I say this because most people get into this game not having a clue what they're doing. That is why they blow up their accounts and they're out of the game within a year. But when you understand what this is all about, you will be further ahead. You're going to come to realize that if they're going to lose their money, they might as well lose it to you. And that's what I like about options. Options are actually contracts. It gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. Now, you don't have to know a lot. It's just two names, calls and puts. All things being equal, if you expect the stock to rise, you buy a call option. If you expect it to go down, I can't even talk here. You buy a put option. Call up, put down. You'll also see this thing called the strike price. This is the price at which the stock can be bought or sold for if and when the option is exercised. And then, of course, an expiration date. They do have an end date to them, and this is when the contract expires. Pros and cons. Pros: flexibility, cost efficient, huge leverage, high return potential, many strategies available, fun, exciting trading. There are many, many strategies available with options trading. I'm not saying that ours is the only one. It's the one that works for me, works very well for me. And when I found a strategy that worked for me very well, I stopped looking for other strategies. I laugh at these people. They come to me and they say, "Oh, I'm just, they want to learn the strategy, they do okay." But before you know it, they're off doing something else and something else and something else. But so many times these people come back around and they say, "You know what? I tried everything out there. You're the best. You're the only one that kind of really works for me." We don't do any spreads. You'll hear this thing with spreads. You'll hear this thing about naked positions. We don't do any of that. No covered calls, naked puts, no married puts, no straddle strangles, butterflies, none of that stuff. I have done some of that stuff. Never really worked well for me. What got me excited was people would be all excited. "Oh my God, I made 5% last month." I'm sorry, I don't get out of bed for 5% a month. Okay. I want 5% a day. Okay, so and I don't want to worry about rolling it over into another strike price or in another month or this or that. No, 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 no. Anyway, a lot of different strategies. With our strategy, number one, you can only lose the money that you put into the trade using our strategy. Number two, we keep it as simple as possible. We don't want to complicate things because the more steps you put into this execution, the more likely things can go wrong, and they do. And number three, What was number three? There was a third one in here, I tell you. Keeping it simple. I can't remember. I'm sure I'll think of it. Don't worry about it. Oh, yes. There were three things I was going to tell you about. I just like the simplicity of it, and it's actually pretty good. And you can pretty well predict how much you're going to make, how much you're going to end up with. It's done. It's done quickly. You don't have to worry about long, extended, uh, you know, trades that go into position sizing or long out trades. Um, we like to be in and out quickly, same day. Okay. There are cons to options, no question about it. There's this thing called the time decay, which you hear us talking about theta. Commissions, of course, and they are risky. They are risky. There's no question about it. All right, SPY. What we do, we day trade only options on SPY, period. That's all we do, SPY. Highest traded stock out there. It is affordable. For even a few $100s, you can get into this business. Very liquid, exciting trading, huge profit potential. Now, I will tell you, yes, you can get in for a couple $100s. You're not going to make a lot of money for a couple $100s, but what you are going to do is gain the experience, and you're going to learn how to do this. And when you have the confidence and the experience, and you understand it, and you demystify it, and now you're going to be taking the money from those other people, then you can put more money into it, right? That's kind of the way it works. All right, folks, over the years, one stock, one strategy, 1 hour a day, we figured out what works and what doesn't work in both trading and training. Okay, it's pretty important. So why SPY? Why now? Well, SPY follows the top 500 US stocks, efficient use of analysis time. You don't have to spend hours and hours looking at stocks and sectors and ETFs and all these other different things. The moves are quick. You can earn your gains pretty fast. SPY is fairly reliable, consistent, predictive, forgiving, and the price can be anticipated in any market, both up and down. You can make money whether the markets are going up or down. Of course, you should note the disclaimer that there are no guarantees. You are responsible for your own trading, and basically, there is risk. Okay, SPY, why not? Learn something new. Stay mentally sharp. It's amazing. Some of the people I talk to, they're in their 80s, some even in their 90s, and they're sharp as a whistle. And it's because of their trading. They figure it's because they have to stay sharp. They're mentally very acute, astute, whatever. They are sharp, sharp, sharp as a knife because they're there. They don't let their mind turn to mush. If you don't use it, you lose it. Kind of like a muscle. You can earn while you learn. Time passes anyway, so you might as well make money along the way. Huge profit potential for serious traders. If you're serious, you can make an awful lot of money on this thing, a lot more than 100% a day if you go in and out, in and out, in and out, right? Folks, dream lifestyle, that's truly achievable. I mean, look at Aaron. He trades a little bit, goes off to Europe. Trades a little bit, he's off to Florida. Trades a little bit, he's off to Mexico. The guy's all over the place because that's what he wants to do. Some people like to do other things. I've got people that want to buy their Lambo, or some people want to buy their dream cottage somewhere out by the lake or their cabin or whatever. Whatever you want to do, you can give money to your kids for school, give them the down payment for their first house, all these wonderful things. That's what options trading facilitates. And you can pass this knowledge on to your kids. Financial security. If you read my recent emails, not the emails, the e-newsletters, we talk a little bit about that stuff. I mean, how cool is that? All right. Here's a comparison of stocks and options. Let's say I want to buy 100 shares of SPY at, say, $450. It's going to cost me $45,000. In fact, I had an email come to me yesterday. I don't have the 45,000 to trade. Well, you don't need it. You're buying options. And I hope whoever's on is watching this. Let's say I want to buy one contract that controls 100 underlying shares. It might cost me $300. $300 can control 100 shares of SPY stock. Now, let's say the stock goes up $1. Well, if the stock goes up $1, your stock is going to be worth $45,100, right? And if there's a 50 delta, which is what it would be, that means your option would go up 50 cents or $50. And that will give you a return on investment of, get this, 0.22 0.222% on the stock versus a whopping 17% on the option. I got to tell you, once discovering the power of options, I never traded stocks ever again. Folks, one stock, one strategy, 1 hour a day. Learn from our mistakes, as you're not going to make them long enough to, you're not going to live long enough to make them all yourself. And with that, I'm going to thank you for joining us. If you have any questions, fire them off in an email. Hope to get back to you on these, and hope to see you in the inner circle, in the trading room, pick of the day, and a Day Trade Spy signal. Been a pleasure, folks. Good night, everybody.